Welcome back and thanks for stopping by. If you're new here, my name is Marcus Auerbach. I'm a real estate agent with Keller Williams Realty, and I have a monthly market update for you, this time for June 2020. I hope you're enjoying the warm weather. We are living through very interesting times in so many ways. A lot of change is happening these days. So, of course, that does not totally go unaffected on the real estate market. So we're going to take a look at that. You may or may not this, but the real estate market is extremely hot right now. The interesting thing is just that buyers and sellers are perceiving the market completely different and they're behaving completely different. So I want to take a few minutes today with you, take a look at that. We're also going to take a look at some macroeconomics and at unemployment rates and what's going on in the job market and what's going on the mortgage market. So let's jump right into it and get started with the big story. So if you've seen the last month's report, you will remember that the big story was that we just did not have enough inventory. And that theme basically continues. We had in May a total of 3,074 homes newly listed on the market, which is about a quarter less than what we usually expect or what we had last time for this month. About the same for Milwaukee and Ozaukee County if you break it down. And so this inventory shortage has, of course, an effect on home sales. So it's not because buyers wouldn't be interested in homes. It's just that we don't have enough product, we don't have enough inventory. And that is driving these numbers here. So homes sold are also down about proportionally to what the inventory is down here. And you may remember we had low inventory last year. So what's going on with pricing? You can see the shortage in inventory and the strong demand on the buyer side is driving up pricing. In the metro area, we have 7.9% here from last year, 208,500. And this year, $225,000. That's the median sales price of a single family home. Milwaukee shows a similar picture. Ozaukee is a little bit behind. That has to do with the luxury segment, high end over $700,000. The really interesting thing here is that these price increases are pushed by the buyers and not by the sellers. In previous years' spring markets, what we have seen is that the sellers were very confident and were raising the bar in terms of pricing. And this year, we are seeing the buyers pushing up pricing. And it becomes very clear when we look here at buyer traffic. So here is data from showing time. We have very precise data about the activity level of buyers. And we're looking here in orange this year. Blue is last year's curve. And you can see the impact here of COVID as buyer traffic was sharply decreasing, but then coming back here in April and in May, exceeding even last year's levels. And as we go forward, that gap keeps widening. And as of last week, we had the biggest gap between this year's showing activity and last year's. So buyers are very, very active, and we are in a very hot sellers market because of all that buyer demand. So let's take a look what's going on with supply. We have here new listings per week, and I was very hopeful in April. I saw the listings per week coming on the market, going in the right direction. And here I got really excited, and now we're plateauing. So we do not have enough new supply. We do not have enough sellers seizing this opportunity to put their house on the market. I'm sure there's a lot of them that had plans on listing the home this year in spring, and they are just holding off. So this is why we have that shortage of inventory right now. And this is another way of looking at it. This is accepted offers in percent of inventory, and you can see almost 11% of the inventory got sold last week. So this is an extremely fast market. And interesting when you look at it through the eyes of a buyer. So when you look on MLS and you look at all the single families in Milwaukee, you will see that 65% of them are already sold. About 1/3 is still available for sale. The rest is under contract. And it gets even more interesting when you break it down over days on market. So you can see that most listings get sold in day 1 to day 3, followed by day 4 to day 10. So basically, within the first 2 weeks, if it's marketed correctly, if it's priced correctly, and if the condition is correct, it will and should sell in the first couple of weeks. And then here you got the balance of the inventory that is sitting, and where the price is just not right, or the condition or the location is just not right and it's not moving. But anything that is desirable will go very, very quickly. Now, of course, this has an impact on pricing, and I have this little confusing but very interesting chart for you. So what you're looking at here is you can see days on market. So this is the progression: 30 days, first month on the market, and then month 2 and month 3, 90 days. And you can see here how much buyers were paying over asking price or under asking price. And you can see there's a lot of them between, paying full asking price and being 10,000 over, and a lot of them are in the teens or even 20,000 over. So after you go past day 10, you can see that this is somewhat stopping, and you see more of the offers being accepted actually with the discount. And then as you progress in month 2 and month 3, you can see anything that's selling in month 2 and month 3 is usually selling below asking price. So days on market, this is what you see here. Days on market is the enemy of the seller, and it's the friend of the buyer. But in this case, there is not much inventory left for the buyers here at the tail end. Everything happens up here in the first 10 days, just like as we have seen it here on this chart. All right, let's take a look at some macroeconomics that are impacting the real estate market. First, the unemployment rate. We just had a really nice surprise from the Bureau of Labor Statistics. I think it was June 5th when they came out with the new data. We had a job gain of 2.5 million new jobs in the US economy. That's fantastic news. It caught the Wall Street a little bit off guard, but it was certainly a positive surprise. And we still have a crazy high unemployment rate of, I believe, 13.3%. And, that's really bad news for all the families that are currently without a job. But I guess the good news is that at least we are not seeing things getting worse. We have actually reached and passed the turning point, and things have started to get better on the unemployment side. And most of the gains, and this is no surprise, came from the restaurant and bar industry, construction, education and health, retail, other services, manufacturing, all have contributed to the job gains in May. The government looks like has laid off a bunch of people. Not sure what they are doing here. But the big question is this trend going to continue into June and July? And what will that mean for the housing market if we have more people getting back into employment and getting back possibly also into the housing market? So this is an interesting survey that I found from Gallup, and they survey every year America's top 4 choices for the best long-term investment. And we can see here then that at the end of the real estate crash in 2008 to 2010, gold was really popular. Here at 34%, it was number 1, and it is now at the bottom of the list with 16%. On the other hand, we had real estate, obviously really low at the end of the real estate crash, and with 19%, and now we are up at 35%. So this, I believe, explains a good portion of why we're seeing such a strong market and why buyers are pushing up the pricing, because they have a lot of confidence in real estate as a long-term investment. Stock market is taking a tank in consumer confidence, especially since I would say the end of 2019. And then we have savings here, and I think that's actually a good thing that Americans are thinking a little bit more about saving money and having a little rainy day cash fund available. That's probably a good thing to have. Now, how does this all translate into home prices and appreciation for this year and for next year? We have here the big players and their forecasts for 2020 and 21 and 22 actually. And you can see that most of the forecasts are positive for this year. I'm certainly on the bullish side from all the data that I can see for Milwaukee and for Wisconsin actually. We are, these are national averages, so we're a little bit more favorable than the markets on the East Coast and on the West Coast. Think California, think New York. They're being impacted, by people moving out of the big metro areas potentially. But, we're doing quite well in the department, and I really expect prices to continue on the trajectory that they're currently at, with increasing in Milwaukee and in Wisconsin in general. Positive outlook for 21, and also a very positive outlook for 2022 in terms of home price appreciation. Let's take a look at lending. So this is what's going on with banks. We have certainly seen, in particular, the large lenders tightening their lending standards. So the average is now up to almost a 750 credit score. So the lending standards are tightening for purchases and for refinances. But at the same time, you do not need to have a perfect credit score. You can see that here, that with the 650 credit score, 700 credit score, you are perfectly qualified to buy a home. In particular, this is good news for a lot of millennials that are now coming on the market. They've been said for the longest time that they prefer renting over buying. And I've seen this trend change in the last couple years. We see a lot of millennials actually get out of renting and get into buying their first home. And you can see your credit score 600, 650, 700 is perfectly fine. You just have to find the right loan product to purchase a home. What's happening with interest rates? So this is more fuel into the fire. Rates continue to be very, very low. We were at almost 5% for a 30-year fixed rate, and we were actually expecting to go into 5.5%, 6% territory. And then 2019 happened and 2020, and now it looks like we're going to stay in the low 3% range. So a lot of people are looking to refinance right now out from higher rates. If you're currently in the 4.5%, 5%, it makes certainly sense to talk to your bank and look into refinancing into a lower rate. And it may not surprise you that the banks have actually quite a bit of a waiting list. There is a lot of refinancing going on, and it may take you 60 days before your refinancing is complete. But this is going to provide further fuel for the housing market, and it also helps with purchases, because you can buy a house this year at a lower interest rate at the same monthly cost that you would have had a year or 2 years ago at a lower purchase price, but with a higher interest rate. So this is actually compensating somewhat for the higher real estate prices and gives the buyers more purchase power, because the rates are lower, and that reduces the monthly payment. So what does this all mean? Here is the bottom line. For the Milwaukee area, we are certainly in a very hot seller's market. The advantage is with the sellers, and buyers have to be very quick and very smart and have to write very competitive and very clean offers in order to get their offer accepted in a competitive situation. We're expecting hopefully a little more housing supply as the summer is progressing. End of June and in July, we're hoping that more sellers are going to seize the opportunity and bring their house on the market. If you have been concerned about how to do this in a safe way, I have recorded a video about some tips and tricks and the technology that we're using to bring a house on the market and actually sell it with some social distancing and with everybody's safety in mind. So I'm going to link at this at the end of the video. And last but not least, if you got value out of this video, I would like to invite you to subscribe to my channel, and I'll see you then at the next one.